All right. I want to explain how to trade futures, and I'm going to be using bybit. This is a demo account. So as I'm using bybit, understand that you can use this video to trade using other exchange because they all have the same similar interface. Bybit, Binance, Mex exchange, and so on. All of them has the same futures interface. Now, what this is the interface. Let me switch to derivative. Okay, this is it. Now, as you can see here, we have the first thing you are going to be seeing is this. The first thing you are going to be seeing is you can see Doge USDT. That is what you are going to be seeing here, which is what you are seeing here. Now, take for instance, a signal was given and you are to trade a particular signal. What you are going to do there is to search. You are going to come to search for that signal. So how do you search? You come to this place, you click on this Doge, and it's going to bring out search. Then you search. Think for instance, you are given a signal to trade, let's say tone. Then you search for tone, and then it's going to bring out tone. You can see USDT perpetual, which is the first one here. You can see that is what you are going to select. So I'm going to select it now. It brings out, you can see it brings out the tone here. So I'm going to be explaining some things to you here which you need to understand before you go into futures. So as you can see here, we have cross, we have 10x, we have limit, we have order price, we have this, and we have buy long, we have sell short. So these are what I'm going to be explaining one after the other, so you can understand. Now, the first one is we have cross. So this cross simply means margin mode. You can see. So we have two type of margin mode. We have cross, we have isolated. Cross and isolated. If you want to trade, be it any exchange, is either cross or isolated. So I'm going to be explaining isolated. I'm going to be explaining cross very, very fast. Now, isolated simply means if it is on isolated, let me confirm. Now, you can see that that cross has been changed to isolated here. You can see it here, isolated. Now, if it is on isolated, it simply means that maybe you are having $100 in your account and you want to trade with $10. If it is on isolated, if you trade with $10 out of that $100, it is that $10 you are going to lose. Peradventure the trade goes against you. Do you understand? It is that $10 you are going to lose. Now, for example, this particular tone USDT is on now. I want to take trade and it is on isolated. Let me pick a trade. Remember, we are using demo, and I just click on sell. Okay, let me see. Okay, let me change it to market. Okay, I just click on sell. Now, the trade is on now. It is on isolated. It simply means that immediately I have minus 100%. Minus 100%. This one that you are seeing here, this one, immediately it goes to minus 100%. The trade will automatically goes off by itself because it is on isolated. It is on isolated. Immediately it goes to minus 100%. The trade is going to off by itself because it is on isolated. That is that for isolated margin. Now, let me explain this second one beside this isolated margin. This one here. This one is leverage. So if I click on it now, we have you can see for this particular pair we are trading, the highest leverage you can use here I think is 25x. 25x, that is the highest. So by default it is on 10x. You can change your leverage if what you are trading is very very sure for you. You change your leverage to maybe something like 50x, 100x, but I don't advise that. Now, leverage to use is always recommended. Like in my signal group, I will tell you use 10x. Use 10x. And let me explain cross. Let me explain cross. If it is on cross, now cross simply means that you are having $100 in your balance and you are risking $1 or $5. It simply means if you trade with that $5, immediately you have minus 100%. It's going to cross over to the remaining balance that you are having, and it's going to be using that remaining $95 balance to service your trade for you. So they are going to be picking from that remaining $95 to service your trade as the trade is going against you. Do you understand? Now the difference is this: which one is more safer, cross or margin? Me, if it were to be my own understanding, I prefer to use cross because cross is more safer. Now if you are using isolated, your liquidation price tend to be more closer. What I mean by that is, if you use isolated, maybe you isolate $10 for a particular trade, immediately that trade gets to minus 100, that trade will get liquidated and then the $10 which you isolated is gone. The $10 which you isolated is gone. But for cross, immediately it exceed minus 100, you start having minus 101, minus 102 till minus 200. Do you understand? Now if you risk $5, remember you are having $100, and on cross you risk $5, immediately you have minus 100. It means that $5 you are having minus a negative balance of minus $5 already. It means you are having minus $5 already. You get? So when it gets to minus 105, 106, 107, when it gets to minus 200, it means you are having a negative balance of $10 already. Do you understand? That is how cross works. Cross give you room for your trade to, for your trade to have room to do whatever it wants to do. For the market, it gives the room to the market to do whatever it wants to do. That's how I understand it. Do you understand? Now the next one I'm going to be explaining is, I'm going to explaining leverage. I have explained leverage here. This is leverage. The higher your leverage, the higher the risk. Now this leverage simply means that if you are risking $5 and you use times 10, it means that you want the exchange to multiply the $5 you want to risk. You want them to multiply it for you. Do you understand? So it means $5 times 10, that is 50. It means you are trading a contract worth $50. That is what this leverage means. Now the higher your leverage, the higher the risk. The lower your leverage, the lower the risk. That is how it works. Now here I'm going to be explaining this one, market. If I click on this place that which I just marked now, which you are seeing market, you are going to see all this: limit, market, condition, and so on. So we are going to be working with only market and limit. Now what does market means? Market simply means that you are buying at the current market price. This is the current market price. So anything I click here, and I either buy or sell, is going to be at the current market price. It's going to take off immediately because it is on market. Do you understand? So if I click anything now, I click on buy now, bim, it's going to pick because it is on market. Now limit simply means you are setting your own price. That is what limit is for. You are setting your own price. So if I am using limit now, most of the signals I will be dropping in the premium group will be based on limit order. It simply means that you just come here, set your limit. Let me use example here. We want to buy tone and we feel like okay, tone is still going to dump. We are buying means long, selling means short. So we want to buy tone and we feel like tone is still going to drop to maybe 6.5. Currently tone is at 6.6 and we feel like tone is going to drop to 6.5. Now we are going to change this market. We are going to change it to limit, and then we put our price here at 6.5. That is the price we feel that okay, tone is going to drop to, and then we put this one, we bring it to 10x, 10%. This represents your capital. Do you understand? If you put 100, it means that you want to use your whole capital to enter that trade. Sure, you understand? If you put 10, it means you just want to risk 10%, which is what I recommend. 10% of your capital, that is what it means. So understand this part, this one that I am dragging up and down. Now, remember, we are on cross. We use 10x leverage and then we are risking 10%. So it is on 10% like that. Now, remember we have set our price 6.5. We change it to limit. We set our price and then we put it on this 10% here. And then I click on buy. Now you can see notification, order submitted. The order will go and get submitted, and then it's going to wait till the price of tone drop to that 6.5 before it peaked. Do you understand? Your order will not start running immediately because you are bidding for a lower price, and it is when the price get to that particular zone or point, that is when it is going to peak. So that is how limit order work, which are the two orders we are going to be talking about. We have market order, we have limit order. Now the order I took, you can see that it went to this particular place here. You can see it is written here, order. So if I click on it now, you can see. So it is when the price gets to that 6.5 that I input at order price, that is when the order is going to execute, and then the trade will start running. Now we have buy long, we have sell short. Buy long simply means you want to long the market. Sell short simply means you want to sell the market. You understand? Now I'm going to be explaining how to set take profit and how to set stop loss for bybit. So let me cancel this order. Okay, before I do that, I will need to enter a running trade. So let me long the market. So if you want to see your trade, you come to position, you click on position. Now this is position here. You click on this position, that is where you are going to see your trade, your running trade. You click on position. So if I click on it, you can see this trade is running now. I click on long. I did not analyze the market, I just click on long. Now if you want to set take profit or stop loss, you can come to here. You can see where they wrote STP, set take profit. That is what it means, set take profit. So if I click on it, you can see here. Now you can put the price you want to take profit. Maybe you enter a signal, you are in the trade already, you want to set take profit. You can set 8. That is 8 simply means that you are going to be having 204% at 8. When the price get to 8, when tone pump to 8, is going to take profit for you. Now stop loss. So this stop loss, you can see your entry price here. So you can use this your entry price to set your stop loss. However, it will be below your entry price. So I can put my stop loss at 6.60. So this 6.60, it means minus 6% loss, minus 6.5% loss. Remember, I am using, this is the demo account, so minus 6.5% loss, and I will click on confirm. So that is it. So immediately it gets to your stop loss. If the market is going against you, it's going to take you out. Now you have already set take profit as well. You can see where we put our stop loss. So if the trade is going against us, when it gets to minus 6.5, the trade will take us out. So that is how it works. So if you want to see the chart, you click here. If you want to see tone USDT chart, you click on this place. So if I click on it now, you are going to see the chart. Currently tone is going up, and as you can see, we are in profit already, although I did not analyze this market. So that's how to trade futures. If you want to trade futures, like I said, if a signal is given to you and they said you should go and find a particular coin, where you are going to come to is here. You click on this tone USDT that you see here. Once you click on it, you search for the coin. Take for instance, you are given Doge, then you select Doge USDT. This is it. So I'll click on Doge USDT and you can see it here. Then you start setting your parameter. If it is cross you want to use, if it is 20x, and so on. But in the VIP, I'm going to be giving you the leverage to use, the stop loss, the take profit, and so on like that, to guide you on the trade we are going to be entering. Futures is very, very easy to trade, and it is very, very profitable. So that's all about trading futures. You're welcome.